Thank you for joining us for today's webinar, How We Use Quick Analytics at Our Bank. My name is Sean O'Brien, the president of QuickRate, and as always, I'm pleased to be joined by Steve Huntington. Steve, you want to go ahead and introduce yourself?
Yeah, thanks for joining us today, everybody. I was going to say on a Friday morning, but it's not. This is not our typical coffee talk format today, but we're really excited to have a guest with us today and to talk about their experience with Quick Analytics, and looking forward to it.
Great. Thank you, Steve. And please say hello to Jennifer Manning. Jennifer Manning is the Senior Vice President and Chief of Accounting at Presidential Bank. Jennifer, I don't know if you want to go ahead and introduce yourself, maybe just explain your role at the bank.
Sure. Jennifer Manning, Chief Accounting Officer at Presidential Bank. I oversee accounting, compliance, loan servicing, serve as the corporate secretary, co-captain or chair of the ALCO committee, and oversee our internal, external auditors. I don't know, you could go on and on, but
Yeah.
risk management, OCC, you name it, I do it.
The very familiar role of the accountant in a community bank. You wear virtually or have access to virtually every hat in the institution. So,
Lots of
well, thank
hyphens
you.
in there.
Yeah.
Yeah, and what's a little different with Presidential is I've worked at mostly publicly traded banks. This is a privately owned bank. So
Okay.
things are a little bit different here.
That's true. Very true. Well, thank you again for joining us. Just a reminder, if you have any questions today during the course of the discussion, please submit those in the chat box or the Q&A icon, and we will monitor those and take those at either an appropriate break in the discussion or certainly at the end of today's discussion. So Jennifer began to kind of explain her role in the bank, but maybe even before that, I should have had you maybe just explain a little bit about Presidential Bank and just the kind of the profile, as you mentioned, of your privately owned bank.
Sure. So Presidential is a privately owned bank, was started by our president back in 1985, and he has been the lead at Presidential since then, and continues to play an integral role in the company. In the past, I would say probably 5 years, we've expanded our mortgage division coast to coast, and even probably more so just in the last year, we went all the way to the West Coast. So we do a lot of secondary mortgages, mortgage loans held for sale, a lot of turn on that side. We also focus on smaller commercial companies, small community companies within the area. We are outside of the DC metro area, so our competition is a little more stiff. We're also very impacted by just the political agendas and the movements in the DC metro area. And obviously, all the government stuff going on right now has an
Yeah.
impact. My traffic is back really bad.
Well, and then so then next, maybe let's just talk about. I think Cecil was the kind of the catalyst that brought you to Quick Analytics, but maybe just if you don't mind, just sharing a little bit of how you became a Quick Analytics subscriber.
Sure. So when I first joined the bank a little over 4 years ago, they had done very little as far as preparing for Cecil. They were trying to build out a database and use SQL or some sort of program writing to do the calculation. And it was just becoming too complex and too trying to get the data into fields that were appropriate and cleaning up a bunch of stuff. That we started evaluating other softwares, and in particular, Quick Analytics came to our attention. I think we actually got a flyer in the
Yeah.
mail, and I said, "Why don't we look at this?" And the simplicity of it, and I don't mean that in a negative way. There's ways you can break out certain loan levels if you need to, but the simplicity of it and being able to understand it compared to some of the more um, detailed softwares that we were looking at was very attractive to us. And so I actually get lots of compliments from our regulators and the auditors that I can explain everything that goes on in
Yeah.
our our model versus they go to talk to other people and they're like, well, that's what the model does. And they don't
Yeah.
know why it's doing what it's doing. So that was very attractive to us, which is why we went the route of using Cecil Solver.
Perfect. That's great. And I think I think that's really one of the main intentions we had, right? We felt like the warm model didn't have to be complicated just for the sake of complication, and we did. We really felt like it was something that banks could embrace and understand, and again, hopefully administer in a manageable way. So from there, then you also used Quick Analytics, uh, kind of grown from Cecil and used it a couple of different areas in the bank. Do you mind, sharing a little bit of those? And Steve, if you have any
Sure.
questions as we go here.
So,
Yeah, yeah.
do you want
I
me
was going to
to?
just direct, if we're talking about Cecil, why don't we could maybe start with some of the elements of the Cecil solver and your usage of it, and then branch out to the other areas of the platform.
Sure. So, one of the things that we really like is the ability to do a custom peer group within Cecil Solver. So we are able to pick the states that we do business in, as far as outside of the mortgage group, which is everywhere. But where we actually have loans in our portfolio, so we can pick those states and then more customly define, the loan portfolios that more align with our organization, and the size of our organization. So we have a specific peer group that I actually probably am a little OCD on it, but we update it on a quarterly basis just to make sure that we're getting the best data that we can. So after call report data is available, I go in and reset up our peer group to make sure that we're capturing all the banks within uh, our methodology. This helps us to be able to grab loss rates. So when we're using peer data versus our own, we are getting the best data out there. And the software, the ability to do that easily is very helpful and is very straightforward. The auditors are usually, once we give them the support for it, they walk away.
Yeah, that's great. And
Um,
how many banks do you have in your peer group, in your custom peer group?
I think there's like 14 right at at the time period. Some of it, it fluctuates, some
Yeah,
drop in and out, just based on their asset size. And we may switch ours up a little bit because we recently went over the $1 billion mark, which we've been doing 500 million to 1.5 billion, but we may up that since we're hitting a new group of, in
yeah,
my opinion, of risk.
yeah.
Yeah, and
Understood.
that's something that we find frequently when it comes to peer data, particularly for Cecil. A challenge in general with using historical loss data as our guide for future losses, which is what Cecil kind of requires of us as our starting point, is that so many institutions around the country, community institutions, just don't. They've had such negligible losses over the recent past that if they're using their own history as their primary guide, you see nothing but a bunch of zeros. And even if you were to expand your look back period and say, well, I'll take into account the last credit downturn. Well, in some parts of the country, they didn't really participate in that very much either. So even if you were taking into account 2010, 11, and 12 data, a lot of our institutions just don't have it very much in the way of historical losses to guide um, where we expect losses to be in the future, and have that be enough to have a reasonable or an acceptable reserve, right, in the eyes of our regulators. So using the peer data a lot of times is the only way we can get kind of directional guidance as to ups and downs of losses in the industry when our own data is just kind of not thick enough or rich enough to give us that direction.
And I should have mentioned also not just the peer group for the loss data, but we actually have used, and I just went through um, some analysis in the last couple of months with the qualitative factors because the software provides the peer data, qualitative factors, what their ranges are. And it helped me because our reserve has been dropping because we have no losses. And so the only other place to look is your qualitative factors. And so we used some of the guidance from the peer data that we found through the QwickAnalytics to kind of assess where our ratios were working and made some adjustments that were just approved last month. So
maybe you'll be able to use the additional traffic because of the government ramping back up as a Q factor adjustment. You need
to. Could be.
Could be. Sean, should we expand on that or kind of step or move on?
Yeah. Well, we can keep going on CECL. Or do you want to show that, Steve?
Why don't I think, taking a step
just so people can see that, just to make sure.
Sure. I'll go ahead and share my screen for a second and just kind of point out a couple things that are relevant from that perspective.
Yeah, just because I think that's been there, but I think this is a really good example of how you can incorporate or utilize it. Because I think, I would sense that is a common issue for a lot of our users is their loss experience has stayed
right.
good. Okay. And you kind of get, as your portfolio keeps growing, you get a little bit of a creep downward in your reserve.
And right now we're using, just so people aren't confused, we're using our kind of our test dummy, not test dummy, but our institution that we use for a lot of our webinars, the not presidential, but Camden National Bank up in Maine. But so if you're in the CECL solver and you're looking at your own historical data, obviously you're going to see, typically we see a lot of this, right? A ton of zeros in our own historical loss rates. And so we go and we look at the public peer data, and we start using that to really give us a significant indicator of direction of asset quality at the segment or at the pool level, not only recently, but going back in time significantly. And in addition to using the peer data that you can get directly from within the CECL solver, if you're still kind of at a point where whatever peer group you've chosen to use, or whatever level you're looking at those losses, you're still seeing not a lot of helpful directional indicators, we can kind of back out of the CECL solver. And if we're on our homepage here, we can head over to what we call industry research. So if I click on industry research, it's just another window, another way of looking at peer data in order to get that additional support for qualitative factors and whatnot. That can be done in a multitude of ways, even within industry research. Let's say if I'm in the performance analysis, I can search for particular metrics like 30 to 89 days past due of 1 to 4 family. There we go. First liens. And I can add a peer group. And let's just say I want to add, I'll just do the national peer group 3. Why not? So I just pulled up the last 12 quarters of 30 to 89 days past due for mortgage loans at the median level. So one great thing about this kind of newer tool that we have here is the ability to add multiple percentile ranks, right? Because a lot of these metrics you may find, even with a larger peer group, you might be seeing a lot of zeros. Now I picked something 30 to, if I chose net charge-offs and I chose a relatively small group of small community banks, I'd probably see a bunch of zeros here too. But that means that gives us the flexibility to kind of create a range of, well, let me just see the range of 25th to 75th percentile for these past due loans. So this is a way to get some good intelligence in your local market for what direction credit quality is going well before it starts hitting your balance sheet as a charge-off, and having to actually manage the reserve through those actual charge-offs. So here I just picked that one peer group. I can overlay a bank. Let's say I wanted to add Camden National Bank here. You can add, of course, your own bank. It overlays them so we can see their trend over the short term versus like that range of 25th to 75th percentiles. And if I want, I can go way back in time and see if we go back to, let's say, before the last credit cycle, we're going to see some really interesting stuff here. So this gives us a real zoomed out view, right, of past due loans at the 25th and 75th percentiles. You see that the gigantic You could drive a truck through that back in those days because the experience was so different for so many institutions, and then have the actual chart data here. So this is just a different way to look at that same data. These are at using percentile ranks like medians or 25th or 75th percentiles. And there's also, in addition to our performance analysis, a credit analysis where we can also do deep dives into some of the same data, right? Let's say maybe instead of 30 to 89 days, I want to look at total non-performing loans, or let's just go to charge-offs. And I can look at it not just as a percentage of loans, but I can see aggregate. So if you wanted to see, show me in the suburbs outside of Washington, D.C., the total number of loans that were charged off in multifamily during the last 12 quarters, just as an aggregate. You can pull that data for your peer group as an aggregate as well. But for here, we'll just take percentage of loans, and then let's add, let's do California banks. Why not? And then similarly, it'll just kind of dynamically pull this up over time. You can change your periods, and you can zoom out to the last decade. But it gives you lots of flexibility in looking at in what buckets you want to look at, what asset quality metrics you want to look at for that bucket, and then some other modifiers. I mean, you can add multiple peer groups, like your UBPR peer group, and then a really hyper local, smaller peer group, and then maybe all the community banks in your state. So there's lots of different ways you can slice and dice appropriate groups of peers to see that are all the ways I can slice and dice my peer group, are they all kind of showing the same directional trend? Or am I finding that when I look at the hyper local group, I'm getting a very different direction or indication of where things are headed than if I look at a national peer group, and those will inform not only your decisions about qualitative factor adjustments, but also how you view peer data as a whole. Sean, anything else on that? Or
no, Steve, I think just maybe go back to the main page so you can again remind our audience where you can find that industry research tab there. And then secondly, just maybe let's talk about Jennifer talked about creating a custom peer group. Maybe just a quick run through on creating a custom peer group.
Yeah, I spend a lot of time creating custom peer groups, so you can see I probably should do some housekeeping in here and clear some of these out. But it's very straightforward and intuitive, simple to build custom peer groups. There's two different ways you can do it. But you can have this, as you can see, you can have multiple custom peer groups. So I think we might talk with Jennifer in a couple minutes about some other ways where she uses custom peer groups outside of CECL and asset quality research. But you can build a specific custom peer group is where you do your search filters and you're kind of individually choosing the institutions that you want, and that list of peers will be the same going back in time. You're saying I want these exact banks as my peer group, versus an automatic peer group or a filtered peer group where you're saying I want all the community banks in my state between 100 and 500 million, no matter who those institutions might be at any given time. And one of the benefits of using the automatic peer group is that it automatically it's self-cleaning and self-maintaining, meaning if an institution tomorrow refiles a call report or they go above or below your filters for who you want in that peer group, the system will automatically remove that bank from the peer group for all the periods where they didn't meet those criteria. So if you say you want 100 to 500 million, then even if you're looking at 2011 data, it'll go back to 2011, see who existed in 2011 who met those criteria, and those will be the banks in the peer group for your 2011 analysis, which is really helpful when you're looking at long-term data trends in asset quality, specifically because, well, if you think about, if you only use the institutions that are around today, right, and then you were looking back to how they performed in 2010, you'd probably be getting a pretty some rose-colored glasses as to how your peers were actually performing, because the ones that had the worst experience in 2010 aren't around today anymore to tell the story, right? So being able to be able to make sure that there's no survivor bias in a peer group, if you're looking at 15-year asset quality trends within a peer group, so you have the flexibility to handpick the institutions or say whoever meets these criteria going back in time. So lots of flexibility, and you don't have to have it one way or the other. You can do it both ways and then see how the data turns out and which one you're most comfortable with.
Steve, one final thing, just maybe go back to the Cecil solver and just show the user trends that again kind of show the median values in the 25th and
Hmm.
75th percentiles for
Yeah,
warms or for Q factors or
sure.
reserve levels. So
So while almost everything in Quick Analytics is based upon the publicly available call report data, within the Cecil solver itself, we maintain a proprietary database of all the data that we've gotten from our Cecil solver users, so that we can present this as an asset to all of our users. Meaning, this is non-public. This is data that you simply can't find in the public sphere. There's nowhere where you can pull up and look at Q factor adjustments and reserve levels at the segment level for typical size community banks, right? Some of the larger community banks have to file that disaggregated reserve information on their call reports more recently, but that's a limited number of institutions. B, it's not quarterly for those that do it, and C, it doesn't have all of your RCC loan buckets. It only have 6 total buckets for the disaggregated reserve information. So it's not complete. It's not comparable for most community banks, and it's not very granular. And so we provide a much better alternative that gives guidance that you can't find elsewhere about where directions for warms and qualitative factor adjustments and reserve levels for other similar size institutions that are using our tool. And you can not only look at median value. So if I click on, warms, which is obviously a critical calculation assumption in your Cecil solver, um, for mortgage loans, if I click on warms, I can see what the median value is, and I can see right here, 25th percentile median and 75th percentile going back in time. And if I click on a different loan type, I get it updates the trend here, and I can toggle between the chart showing the 25th, 50th, or 75th percentile of those trends. So, and you can pull it all into Excel as well. So just gives you, and this data, we're updating it as we've been improving how quickly we get it updated. Now it's updated pretty much on the last day of each quarter for that quarter. So you have access to trends about for the quarter that you're calculating your current reserve on before publicly available data comes out on that quarter. So it really gives you a leg up on good quality external data that will help you in making that either the initial kind of estimate for Cecil before more data comes in, or truing it up down the road. John?
perfect. Jennifer, anything you want to add here around these pages or
Yeah,
the Q factor?
this is exactly where we were looking at the qualitative factors, and we use this data to compare where we were running as far as our basis points, and made some analysis and some changes based on using some of this data. So it's very helpful.
Perfect. Great. Perfect. Okay.
You
Great.
want to head back to the
Yeah, I'll just put
presentation?
yeah, let me grab this real back for me real quick. Okay, so next, Jennifer, also you've incorporated some reporting or just information to your board on a quarterly basis. What do you share with them from Quick Analytics, or what do you find helpful that you can share with your board on an ongoing basis?
So on a quarterly basis, I run the peer watch trends, and what I do is I have another custom peer group for banks within our area. As I said, being in the DC metro area, the cost of deposits is much higher than in other areas. We can see how it's trending with some of our peers, kind of dig into the deposit information, where their ratios are running, and see where we're at. So we use that, and I'm actually have the September report in our board package for Friday. So
Now, is that a different peer group since you're looking a little bit more locally
it
than the
is. It
national one?
is. So I have a custom peer group for Cecil, so that I'm pulling banks that's their loan portfolios are more similar to ours. And then the one that I do for our peers are local peers. So not necessarily based on asset size, but based on who
Right.
we think our biggest competition is in the market where our headquarters is.
That makes sense. And so, Steve, maybe again, just maybe show the audience kind of where like we can find Peer Watch trends, and
Yeah.
once you've created that peer group, kind of what the output
Yep.
looks
Yeah,
like.
and it's very helpful, Steve, if you could also just show like it shows kind of where you rank within the peer group that you have too.
Yes.
Yeah,
So I'll pull up here and I'll go through all of those briefly here. So one of the, mm,
there you go. Yeah, I can
oh,
see it. Yep,
all
we're
right,
back.
that's good. That's totally not where it was when I did this 5 minutes ago. That's very frustrating. Um, so actually, the first thing that we ever sort of built at QwickAnalytics was the bank performance report card, right? And that one is one of the ones that I believe you also run, Jennifer. So if you're with the bank performance report card, I'll pull it up here just very briefly. It's a comprehensive report that has data from all different sections of financial performance, and it's kind of formatted as one big PDF here with an executive summary and then 6 different sections of performance. And the format of it is um, long-term financial trends in a table format with a trailing 12 months and a most recent quarter. And then on the right-hand side here, in addition to showing, let's say, your institution's value, you get to see your peer group average, your peer group median separate, your percentile rank from 0 to 100 within the peer group, right? Whether that's good or bad, just sort of from low to high. And then we do some proprietary, some grading as well, which is really just um, um, quintiles, right? If you're in the bottom performing 20th percentile of your peer group for that particular metric, it's a 5, and if you're within the best performing 20th percentile of your peer group for that particular metric, it's a 1, and the 5s are kind of flagged as being something to take a look at. Not necessarily a bad thing. It might just be part of your business model that you're higher or lower than most people on a particular metric. And then obviously we flag in green the areas where you're really excelling by any objective standard. So this is that Camden Bank. Their ROATCE is 17.5% compared to a median of 13.5 for that peer group, putting them in the 81st percentile of something that obviously is better higher, and so they get a grade of 1 there. And so we do that kind of throughout your performance. And in addition to the charts, we have lots of we made sure that in the bank performance report card, the tables that we used, or the charts that we used, sorry, were large visual, kind of 2 to a page sized ones that really captured the most important elements of absolute performance and relative performance compared to peer group averages and peer group top performers, so to speak, over time. So this is example core operating earnings. You can see they had a big jump this year. You can see they had been below the peer median and they've come up to it, and that's where the top performers are. So a lot of information in one relatively easy to digest chart. Now, the BBRC is pretty comprehensive, but it is not extremely flexible, right? The only choices you really get to make are, hey, what pages and what peer group do I want? Whereas our more recently, we've added what we call our kind of a completely custom report package. And this is, if I click on the report package, it's going to take me to a page where I can kind of build it however I want to, where I can say, I want long-term trends. So show me 4 or 5 years worth of data, or show me the last 8 year-to-date values, or just show me the last few quarters. And do I want it to be updated for now, or do I want to run it as of the end of a previous period? And what peer group do I want to use? And then all the different pages. So you can kind of build an ALCO package here, and then you can build a loan committee package. I mean, you can build a board package, and you can build multiple different packages and either have them run immediately, as you can print them, you can build a PDF, export into Excel, or you can also save them for future reference. So if you have 2 or 3 that you want to get every quarter, as soon as the data is available, you can build it, save it, give it a name, and then just say include it in my quarterly email. And the second that we've updated our system every quarter, with pretty much the day after the call reports are due, you'll get an email that'll have not only a default one that we suggest is a good one to look at, but also any customized ones that you want. So you have packages ready to go to all your various audiences the second that the call reports have all been filed.
And just a reminder, those are, the tabs on the left, the financial performance tabs. That's what those are really pulling from. And so again,
Mm-hmm.
even there with your custom peer group, you can see a peer median value and where you rank within that peer group on all those interactive tabs as well. And then Steve, maybe just reference Peer Watch trends as well, where you can, show just side by side.
Yeah, yeah. Sorry, I just ran ahead and built
Yeah.
one right there. So it's pretty much instantaneous. So I just kind of built a filtered, customized bank performance report card in just a few seconds, which has, my overview, and again, with my data, the peer median, and then what percentile rank we are compared to that peer group, with the greens being, best performing, and reds being not as well performing. And then I chose my performance matrix. This is that visual heat map of performance versus the peer group at any given point in time. And well, you saw what I checked, so those are the ones that are included in the report. As Sean mentioned, in addition to some of those standard, we have a couple other. If I head back to the main page here, that was the bank performance report card that I showed first. The other couple of formats that we have are the Peer Watch and the Peer Watch Trends reports. Peer Watch report is, do I have one here? Yes, I do. So Peer Watch report has, again, a bunch of individual institutions. It's kind of where you handpick up to 11 peers and you get to see your data side by side alongside with them. A couple charts, but mostly just tabular data. And then the Peer Watch Trends report, which I can click on here. And again, I would run it on, let's say, our institution. I can pick, once you've built some of these custom peer groups, they are available in all of the different tools. So you don't have to build, you can, as soon as you build one, as long as it's decently appropriate for the tool that you're using it becomes immediately available throughout the platform. No matter pretty much what you're looking at, you don't have to go and build it again for different tools. And here with the Peer Watch Trends, you get to choose it's a deeper dive analysis on certain particular metrics. So let's say I want to run it for these metrics. I'll go ahead. I can give it I'll just run that report. It'll be ready in just a second. And we'll give it a second to run. Sean, anything you want to point out here on the homepage while we're waiting for 15 to 20 seconds?
No, the only other thing I'd say, just maybe adjacently, right? I mean, I love Pure Watch Trends. It's actually my favorite report in QwickAnalytics because, again, I think, as Jennifer mentioned, right? I mean, there's instances where, geography does matter and you are interested in, particular institutions just in your locale, and utilizing Pure Watch Trends really allows you to kind of focus in on those particular banks for whatever metric you're looking at, right? And whether it's deposits, or maybe it's loans, or just their NIM, or, charge-offs, whatever it is, it just gives you not only a nice, quarter graph at the top there you can see, but a longer term trend with the actual raw data. But it has it for the specific banks that you've identified to compare to. And so, just the ability to quickly create a peer group and then get this level of detailed information. To me, again, it's actually my favorite report within QwickAnalytics.
I would agree.
And
But this one it went from, having to try to gather this data from regulatory reports that had been filed to be able to come in and just, quickly I already have my peer group set up, but quickly run a report that shows us where our trends are compared to our competitors in our market. It's invaluable.
Yeah, thank you. And again, I think the thing with there's a lot of things I love about this, but a lot of times we may look at something, in our rhythm with board meetings is monthly or quarterly, and so sometimes we get in a little bit of a vacuum of just that snapshot. And what I love about this is it gives you 5 full years, the last 4 quarters, so you can really just kind of see how things have evolved or developed. And so it just gives you a really complete
and
picture.
please completely ignore all the data that's in this one, because I've compared Camden National Bank to a bunch of bankers banks. Not the best, probably not my first choice of peer groups for a community bank in Maine, but we'll overlook that for today.
Yeah.
I will also say for anyone who's thinking about using this, our board really likes the visual of the graphs. I mean, it gives the data, but the graphs kind of paint a picture that's a quick and easy to look at.
Yeah, that's a great point, and I think tailored to the audience that you want to present it to, right? Everybody consumes data in different ways, and so oftentimes the board, a little bit more concise presentation like that is invaluable. Jennifer, anything else? I know you do some more custom reporting, but anything else that you would utilize or that you share or your team members utilize that we haven't touched on yet?
We do use the deposit data as well, just to kind of look at where the market share is, and maybe perhaps you could touch on that a little bit.
Yeah, so we get just like everybody else, we get that deposit data once a year from the FDIC in their summary of deposits, which is, as we all know, as of June 30th of every year, and we get it at some point during October, typically. And so the way that we do that is, in addition to what, if you go to the FDIC's website and you pull up market share reports, you're going to get it in one way. And what I mean by that is, you're going to be comparing yourself to all the other institutions, no matter what type of institution they are, that have deposits in your, or branches and deposits in your market. And so the way that we've kind of added value there is in that QCBI index. So the QCBI, for those of you who don't know, just is the QwickAnalytics Community Bank Index. It was our take on the FDIC's definition of what is a community bank and what isn't. And so it's a bunch of financial and structural filters where we weed out all the big national and regional and internet and non-real estate based institutions, and whoever's left over are community banks. And so we're able to separate out community banks from non-community banks, even when we're looking at things like market share. So for example, Camden National Bank up in Maine, some of the markets that they're in are a mouthful. It's a bunch of Native American names. And so Androscoggin County in Maine, which I'm actually familiar with, you can see that they're ranked fifth in market share. So if you went to the FDIC site, they would tell you that they're ranked fifth in market share with 9% of deposits in that county. However, if we start excluding non-community banks like TD Bank and Key Bank, that are obviously large national institutions and not community banks, and recalculate things like market share on a community bank only basis, it gives us a different view of what percentage of community bank deposits an institution has. And you can see what impact that has there. You can see it at one point in time. You can see it over time. So I can look at a 5-year market share trend for any particular market or county. And we have a summary up here at the top where it shows all the markets that an institution is in, what percentage of the deposits they're in, kind of summarizes the whole market share look for an institution. Of course, it can be done at the state, MSA, county, or even the city level. And if you want to keep the big banks in there, but kind of exclude them like this, you can. Or if you just want to look at only community banks, you can kind of exclude all those guys from the beginning and just run market share stuff on a community bank only basis. So that's a great way to use that branch data, the deposit data. And I can
Steve,
also,
one thing before you go, I was going to have you go back. Go back to that
sorry.
page.
Yep.
And so just that little box, again, we've talked about creating peer groups. Another way you can create a peer group is to click on those little boxes. And you can create a peer group just by selecting one. So again, if you're looking for something geographical to create a geographical peer group, that is often an easy way to do it, is to just use your deposit market share tab, locate or identify some of the banks in your backyard, and you can create a peer group of them simply by clicking on those in the market share.
Yeah, just kind of a shortcut to,
yeah.
That's how a lot of institutions we found were doing it that way, and so we wanted to create a direct route for you guys to do that. And so if I'm going to head back here a couple times.
Yeah.
I don't suggest navigating like this too much. You can't. I'm always. So yes, if I also wanted to just briefly point out, in addition to from the market share page, you can also just pull up a current branch list for an institution and see current deposits, 1 year ago deposits, so single year annual growth in deposits at that branch, and then 5 years ago and 5 year growth at each individual branch. And I can click on a branch here, and it'll pop up and give me not only the address information and the current deposits, but also when that branch was originally opened, and if it was acquired from somebody else and it wasn't a de novo institution, when it was acquired. So Camden National Bank, their Belfast branch they acquired from somebody else in '87, but it was originally opened in '78. And I can even see what it looks like. There's a Google Image Maps view right there. Fingers crossed that it wasn't a cow walking down the street. That worked out great. And I can also, of course, click on the map, and this branch map actually does have some interactivity to it. I can zoom in a particular market, and you'll notice that this is a list of all their branches. But as I zoom into, let's say, the Brunswick area and Bath area of Maine, I've zoomed into a particular kind of geography, and now it's parsing that branch list and only showing me the branches and the deposits that are in this area. So for this large community bank in Maine, of their $5.5 billion in deposits, they've got 192 million in this particular area. And I can, again, click on the individual ones and get their information, or I can even come back in if I want to and add competitors. So if you want to add some competitors in your footprint and kind of get a geographical representation of some of them, I can check on a handful of these guys here. And let's say I add them, and now I've added, and I can see there's purple and there's some blue, and I can get the legend, which is the purple is Androscoggin Savings Bank, the blue is Auburn Savings Bank. So it's just another way that I can visualize that branch level and competitor level detail directly from the market share information.
Perfect. Steve, anything else you want to show before I take back the screen?
I don't think so. I think you can go ahead and take it back now.
Okay, pull it back. All right. So I think we've talked on the different areas where, Jennifer, you're currently using QwickAnalytics. Anything else, again, that I skipped over or didn't focus on that you're using it for?
No, I think you hit on most of it. One thing that, and I was thinking about this, it goes back to Cecil Solver, but the Fred detail that's in there and the graphs that you can print is a useful tool for analysis as well.
Good. Yeah. So again, I think we're going to try to continue to just keep adding and incorporating, different, resources like that to improve, relative information, just contextual information. So, yeah, any suggestions, certainly be quick to share those. Steve, anything else you wanted to cover that we didn't cover yet?
No, I think we touched on all the ways that Presidential has been using the tool, and we continue to add more tools to the toolbox and more different ways of visualizing and looking at not only your absolute data and performance, but also that relative data. And so, if you, this is a call to everyone on the webinar, that if there's a particular format that you guys use at either in your management team or at your board, which you think could be of value to other community banks, we would love to get some of those ideas. A lot of the stuff that you saw actually on the call today came originally from institutions way back in the day that we knew had certain visualizations that they thought were really helpful in their board reporting and in their management teams. And so, we definitely want to hear from you all on what ways you like to see and look at this data and track it.
Great. Just a reminder, we will send out a link to the recording today along with a copy of the slides. As we've touched on, we're aggregating QwickAnalytics from, multiple data sources. We'll continue to do that. The more we can incorporate, the better. As we've kind of said all along, we think our time is better spent aggregating data so you can analyze data. So we are on a, continued pursuit of trying to incorporate more information into this for you to digest. Certainly past webinars can be, found on our YouTube page. Just a reminder, that next level of data is available to you through a tool we call IntelliCredit, particularly around your loan portfolio. This is where we do pull your core data, put it into an application so you can kind of mine your data at the loan level, but it does give you the ability to really, create your own dashboards, really more easily mine your own data, build reports. Again, we are this one right where you really kind of get into some nuances and just things that you may, produce today for your board or your bank on a monthly basis. That's why we offer the trial, because we want to get your data in, show you how easy it is to get the data in, but then be able to let you see and play around with it for 3 months to see if it's adds value to what you're doing today. So certainly encourage you to take a look at that, or perhaps view a past webinar discussing how the analyzer works. Any final comments, Jennifer, Steve, before we let our audience go today?
I can't think of anything on my end.
I think I've talked enough again, John, for one day.
Well, thanks. A very big thank you to Jennifer for joining us today. We really appreciate you not only being a customer, but taking the time to share your experience with our group today. Thank you all for joining again. Look for that an email. Today's Wednesday, probably late tomorrow afternoon, Friday morning, with a link to the recording and a copy of the slides. Thank you for attending. If you have any questions, you can always call us
Did
or
we
reach
get
out
one?
to us at
Did we,
info@quickrate.com. Oh,
Did
I don't know if there's a question or just someone raised their hand. Here it comes through the chat. Oh, no, thank you. I think, let's see. Oh, yeah, I don't think there's anything attached to it. So, no.
okay.
All right. Well, very good. Well, thank you again. I hope you have a great day. Happy Thanksgiving, and we will see you on the next Quick Analytics webinar. Thanks so much.
Thanks,
Have a
everybody.
great day. Thank you.